Welcome, ladies and gentlemen. Cathie Woods shot to investment stardom last year. Ark's selection of ETFs placed big bets on the technologies of the future, ranging from fintechs to 3D printing, and made huge gains. 2021 has been a nightmare for Cathie Wood, and December was the worst month. The main reason has been the fact that investors are ditching tech stocks, which were overhyped in 2020, and now the inflated valuations of the companies are slowly going down. Ark Invest flagship innovation ETF has dropped more than 10% in December and is now down by a whopping 23.7% for the year, putting it in a bear market territory. 6 out of 8 of Wood's main ETFs are now in the red in 2021. Ark Genomic Revolution has crashed more than 30% and Ark Fintech Innovation is down around 15%. But I am not surprised to see that because it has happened several times before in the investment world. Sometimes a fund manager captures the mood of the market, and this is exactly what happened in 2020. Cathie Woods invested in tech companies which were very disruptive and innovative through her Ark ETFs. But the tide turned around in 2021 and her funds started underperforming. In this video, we will look under the surface to pinpoint the reasons behind that turnaround. And we will also look at whether Ark ETFs would start performing well in 2022 or beyond or not. So let's look at Cathie Woods' Ark funds in a bit more detail. One reason for the accelerated losses of Ark ETFs is the rise in treasury yields that has hit the technology and growth stocks in the wake of the shift in Federal Reserve's monetary policy. Anytime we see the 10-year US treasury yield move so fast in a short period of time, it generally coincides with the market sell-off of some magnitude. It is not surprising to see value and cyclical stocks hold up better than their growth counterparts given the increase in yields. Therefore, the high growth stocks that helped Ark ETFs to make enormous gains during the last year lockdowns have now deteriorated the performance of the fund in 2021. The so-called stay-at-home stocks like Teladoc Health and Roku lost their appeal and charm as investors shifted their focus to financials, energy companies, and other economic reopening plays over the last few months. Therefore, what worked for the fund in 2020 has not persisted, even if the long-term trends favored by Ark remain relevant. And we live in a connected world, so the China's move to crack down on Bitcoin trading came as a potent blow to Ark Innovation ETF fund ARK, which lists cryptocurrency trading firm Coinbase Global Inc. as its 5th largest holding. And here is the big picture. As we can see, several of Wood's top holdings this year are floundering during the market rally that has pushed up the benchmark S&P 500 index more than 18% for the year to date. Now the decline in performance of Ark ETFs has led to interest in shorting Ark ETFs, and this could further speed up the decline of Ark ETFs. And don't take my word for it, the results are already apparent and could have catastrophic consequences in the future. So let's look at the underlying facts. Cathie Woods' Ark Innovation ETF Ark, which focuses on disruptive businesses, holds many of the top growth stocks, and its top 5 holdings are Tesla, Teladoc Health, Zoom Video Communications, Roku, and Coinbase Global. Excluding Tesla, which has a huge fan base, all of these stocks and Ark itself have crashed by more than 20% since November 9, while the S&P 500 has declined just 2%. So what happened on the 9th of November? Let's first go through these news and then I will give you my own expert opinion on that. For those of you who are new to this channel, I am Dr. Subail Khan from subail.com, and on this channel, my endeavor is to help you in making your money work harder, smarter, and in long term. So one possible contributor to Ark's recent weakness is a new investment product. On November 9th, the Total Capital Short Innovation ETF began trading. This exchange trading fund has a simple goal to generate the opposite return of Ark Innovation Fund every day. The fund has no broader purpose beyond betting against high valuations, specifically in that one ETF. And this is what I think. Before making any investment or allocating funds to stocks or any other investment instrument, an investor must gauge 3 things. Number 1, risk. Number 2, reward. And number 3, certainty. The main problem with short selling is that you can get liquidated and lose all your money. This ETF obliterates this worry. So with this ETF, investors can take a short position against Ark without having to worry about borrowing on margin and all the risks that come with short selling, such as incurring unlimited losses. And it is not entirely unreasonable to hedge against growth stocks now, especially if you are worried worried about valuations and the potential for a market crash. And most of all, doing it via an ETF is much more convenient. So how could ARK ETFs potentially perform in 2022? I believe the interest in short selling is short-lived as companies create more impact in their markets. So I wouldn't be surprised if these declines prove to be short-lived. Just as automaker Tesla defeated the short sellers, as did e-commerce giant Shopify, quality companies will continue to weather the storm and prevail in the long run. For opportunistic investors, now may be an optimal time to consider loading up on some of these growth stocks while their valuations remain significantly low. Also, Cathie Woods and her team have excellent diagnostic and analytical skills required to shortlist quality growth stocks. And this is apparent from the fact that one of Cathie Woods' favorite stocks, Teladoc, has lately seen a particularly high level of negative investor sentiment. Short interest in this telehealth company is at records high for the year. This is even as Teladoc came off a strong quarter last month and continued to support a record number of telehealth visits. The company is also rolling out Primary 360, which aims to give patients more personalized around-the-clock care, and that could help the company build on those numbers next year and beyond, especially as people look for low-cost healthcare options amid rising inflation costs. Therefore, there is certainly no reason to justify such a steep sell-off of the stock, yet Teladoc hit a low of $88 this week. It hasn't been at those levels since the start of 2020, well before the pandemic began and back when telehealth wasn't as common as it is today. To suggest that the stock is worth the same amount now is absurd, but it does create one heck of a buying opportunity for investors. Therefore, Teladoc and other growth stocks in ARK ETFs didn't all of a sudden become worse investments in just the past few months. Instead, there looks to be a surge in people betting against these stocks, possibly because it is easier to do so through the SARK ETF. And so short interest could continue to rise in the short term. Also, ARK ETFs could be a good addition to the portfolio since it provides another dimension of differentiation. Furthermore, as far as the time horizon is concerned, even S&P 500 goes through dips, and looking at the broader picture, things don't look so bad. The average annualized total return of ARK funds is still around 30% over the last 5 years. The premise of ARK funds is not to give you an S&P or a Nasdaq performance. It is to buy into the concept that the future has technology embedded into it, and to be part of the future, you need to buy a big number of lottery tickets. So if that is something that resonates with you, ARK ETF provides you with that opportunity. So yes, I think she can turn it around. If you look at the performance of her funds leading into the pandemic rally, you can see that they are very good. She outperformed the Nasdaq. She also outperformed the S&P 500 by a huge margin. So she clearly has the skill of selecting stocks which could outperform the market. So we might not get the kind of crazy performance that we saw in 2020 for the next 1 or 2 years, but in the long run, we could see solid growth as companies in her funds create massive impact across different business ecosystems via disruptive innovations. I hope that you liked the content of this video. If you would like to see such videos with my unbiased opinion and my own unique style of analyzing stocks and looking at the microeconomic and macroeconomic aspects of economies across the globe, please drop a like, subscribe to my channel, and I will see you in the next video.